Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the Beginner's Class Series, class number 3, entitled The Tools. Traders from around the world, how are each and every one of you doing? Those who are here live in computer webinar land, what's going on? Type in some ones if you can hear me and see my screen okay. For those watching in the recording, probably on YouTube, you might have found us from Twitter, possibly on our website. Thank you so much for being here. Still, no sales pitch in tonight's class. Enjoy the free content. Tell your friends all about real life trading and let us help enrich lives across the world. Tina, thanks so much for the one. Jim, thank you so much. Lisa, Justin, appreciate you being here. What's going on? Les, how are you? George, oh man. Dina, what's going on, Dina? Brandon, thanks for being here, man. Appreciate it. So tonight's class, as you know, is entitled The Tools. So what we're going to do is we're going to be talking about some easy steps to follow from here as a review. And then we're going to talk about brokers, charting softwares, and what information you can access with those materials. Type in a 1 if you want to get these 8 easy steps to follow as a great review between here and where you want to be. All right, there's those numbers. I love seeing those. Yes, yes, yes. Now, so that we're all aware, this is where I could be like, all right, if you really want these 8, one payment of $895. You know, that's where you would put this in if I was doing a sales pitch. This is where it would be. So that you guys all know how this whole process works. But I'm going to go ahead and start giving it to you right now. Step number 1. Here we go. What you need to find first and foremost is you need to find a stock, however you want to find it, that you are familiar with. So a stock that you interact with every single day. Just pull up that company. It could be Google, it could be Facebook, it could be Apple, it could be Twitter, it could be Snapchat, Chipotle, Buffalo Wild Wings, Panera, Ford, General Motors, whatever that company is, right? Pull it up and then chart it in your charting software. Now we will be talking more about charting softwares a little bit later tonight. We'll discuss which ones you have, which ones are good, which ones are better than others, which ones you can use, things like that. So TradingView is the one that I use. I'll be talking more about that in a moment. And then once you have that charting software, once you have the stock that you like, the company that you like, pull up your charting software and then chart the stock. So let's do an example really quick. Let's just hop over here to TradingView. And let's say it was, I don't know, British Petroleum. It's probably too easy of one. Let me try to think of something else. Type in a ticker if there's any stocks that you want to look at. Facebook, okay, Twitter, GoPro, those are all good ones. Any other ones that you, we're trying to think if there's one I haven't used in any of the recent examples. I don't know if BP is one of them or not. Well, let's just look at BP. It's here, it's pulling up. So let's just practice it really quick. So I'm going to hide all my drawings on the screen. I'm going to hide everything. And again, I'm going to zoom out. I'm going to put a line chart on. And what we're going to do is we're going to practice really quick charting this. So Tony, if you don't mind, go ahead and tell me what prices, as I zoom out here, tell me what prices you see as a support and resistance price, and then I will draw those in. So again, this is the charting software TradingView we're using, and we're looking at the chart British Petroleum. And let's just kind of get some lines. All right, so Tony's giving me 33. I like that. Probably basing that off of this support right here. Look at that beauty. I love it. 48. Yep, that's a great one. So here's 48. Right about there. Wonderful. Yep, 28's also one. So that was one kind of a while back. And then 63.90. So probably right about here. Oh, you said 60. Oh, 60.90. Sorry, I read that wrong. 60.90. Yeah, so right about there. So here's the cool thing. There's your 4 lines on British Petroleum. Now, you all probably have heard of British Petroleum. That's the company that you probably get gas from, right? BP. So now once you have it charted, then you ask the big questions, right? You ask the questions like, where am I going to get in? Where am I going to buy? Where do I place my stop? Things of that nature. So once you create the drawings, you now have a plan. You have an idea of where to buy. So there's your support. Where to potentially sell, right? Either way up here or some of these other shorter term resistances. We'll be talking about exactly how long you plan on holding trades. more in class 4. We talked about them a little bit in class 2. And that's pretty much about it on BP, right? So you come up with a support and resistance. Lo and behold, BP at a support level right now, just as an example. Okay, so you come up with the stock, you chart the stock, you go from there, and you start rocking and rolling, right? So once you come up with the stock, once you know what you want to trade, once you know exactly where it is that you want to buy it, open up your brokerage account. So we're going to talk about brokers in seconds, and we're going to discuss which ones you can use, and then you buy it. You buy shares as it bounces off of support. If you want to confirm your bounce with a one white soldier or other candlestick patterns, you can do that. And then of course you set your stop and your risk 1R. So you create your plan. You base where you're going to open, what you're going to do, where you're going to place your stop, how many shares you're going to risk, and then you take the trade from there. Number 8, of course, this is the longer term one. This is the one that you sell to close when it comes into either a target or a resistance. So if you're looking at selling, right, that's the longer term aspect. So don't worry about the target nearly as much as the stop. The stop, that's why it's first. That's the most important aspect of all this. Make sure you know where your stop is. Make sure you know where to get there. Place to stop, important. But really, guys, that's the 8 steps. That's it. Boom, done. Real simple. Okay? That's about it. Real simple. Those are your 8 steps. Print them out. Go through them. Now, as you begin, become a little bit more advanced, right? We're talking about this a little bit more in class 4. It's up to you how far you want this rabbit hole to go. If you want to do longer term, bigger picture, get in, hold for 4 months, get out, this plan right here, very, very useful. If you are more interested in day trading or active trading because your work schedule or your life schedule allows that type of thing, that's totally fine. We'll be talking about how to build a plan for that in future classes. But choose a company from this that you interact with and has more than 1 million shares and has good, has more than $5. And again, we've already mentioned all the stocks. You guys know from here kind of what stock to choose. If you don't know one of the stocks to choose, here's some really good examples: Starbucks, IBM, GM, Chipotle, Panera, Walmart, Microsoft, Target, Disney. So just think about these companies. What do you interact with? What companies do you use on a day-to-day basis? Any questions so far before we actually get into the tools? Rhonda, valid question. Rhonda says, how do you know if it has more than 1 million shares on average? Well, let's do it really, really simplistic like. Let's go to a chart that you probably all are familiar with. I said a chart. A company, Yahoo Finance. Yahoo Finance, really, really easy to use. And in the top right-hand side, it'll say quote lookup. Let's say you wanted to look at Starbucks. In fact, I think if you type in the company, let's say you don't know the ticker. Let's say you type in the company Starbucks, it'll still pull up, I believe. Yeah, Starbucks right there. So Starbucks, you type in the whole thing, you can click it if you don't know the ticker symbol, and that's helpful. But as you pull this up, here's the easiest way to determine the average volume. Bam. Volume, 13 million. Average volume, 9 million. So Starbucks easily meets those guidelines. In fact, let's go and look and just see let's see what my lines on Starbucks already are. So I'm gonna re-hide my lines and check that out. So this $53 price range, I'm not saying that Starbucks will trade down to there again, but if it does, you can see how well this $53 price has interacted with that support, that price before, and how many times we've bounced off of that, or at least we've gotten very, very close to it. So what that could at least help you with is to simply know down at this area, this is where you should be buying, and this up here is where you should be selling. And so when you have that knowledge, once you can approach something with that standpoint, at least then you know where you should be getting in and where you should be getting out. Again, that's the plan. I feel like that is what creates a professional real life trader, someone who can approach a stock, create a plan, and go forward. So that was a great question. Any other questions before we actually get into the brokers? The good news is brokers not not a very controversial subject. I get a lot of questions about it, but most of them are just like, hey, have you ever heard of this? You ever heard of this? You ever heard of this? So, all right, well, let's get started then. Let's get that pulled up. Here we go. Rock out. Oh, I don't want to start on that one. Let's start on this one. Here's the tools. All right, here we go. We're going to talk about charting softwares first. So charting softwares, what the heck is a charting software? Well, charting software is what you've been seeing me use, the actual application, the software application for you to visually pull up the stock and see what in the world it's doing. For example, you got TradingView, MotiveWave, Trade Navigator. Let's talk about a few of these. These two I'm going to do in purple. Thinkorswim and StreetSmart Edge. These two are actually softwares that are linked to a broker. So meaning they are broker owned. They're inside the broker, which makes them good, but ease of use is pretty low. In fact, looking at this graph again, it reminds me that I should probably never be a kindergarten teacher. I grade way too easily. I can make those much, much lower, like C's, D's. Thinkorswim and StreetSmart Edge, not the easiest to use. They're phenomenal platforms. Like, they're very, very good. A+ on the features, for sure. Incredible, incredible stuff. But ease of use, quite low. Most traders, especially if you're brand new, will get into those and really be totally lost. You have to already have a broker to use those. That's why, again, they're a little bit farther down on the list. eSignal, very expensive. Again, pretty robust. FreeStockCharts.com and StockCharts.com, both good sites. However, you have to deal with a lot of ads because it's free, and that's totally fine. I get it. You gotta pay the bills somehow. So when you have FreeStockCharts.com, it's good. It's good to access. That's pretty much it. The features, they're a little bit light on the features. Again, I'm way too nice on grading this. I need to be mean to people. I'd probably give them a B, actually, on the features. They're good. They have a lot of nifty things, but you can't trade through them. You obviously have to, like most charting softwares, you create the chart, and then you actually place the trade in the broker. NinjaTrader is really good. I initially put this as a B-. Now it's going to be an A+. They've kind of changed their software a bit, and it's now free to use. So you can actually pull up NinjaTrader. Ease of use, I think B+ is accurate. NinjaTrader, very, very useful, easy to use, easy to pull up. You can trade through NinjaTrader. Once you actually start trading with it, though, the cost can get it back down to a B-. So when you're first starting out and you're doing something brand new, yes, NinjaTrader can be good. But if you are advanced, really, really into trading, NinjaTrader can be great. It can be really overwhelming, though, if you're a fresh beginner. TC2000, phenomenal software. Again, a little bit more for the advanced traders. MotiveWave, I like it. Trade Navigator, probably of all of these platforms has the best features. I could probably give this one like an A++. Well, that one in TradingView. Trade Navigator has incredible features. Back trading, historical replay, you could build algorithms, you can build, you can almost create your own black box trading through Trade Navigator, which I think some of the other ones you probably can too, but I just haven't done it. Trade Navigator is good. The reason I don't like Trade Navigator is it can actually get pretty expensive month to month if you're paying for the data. If you're trading real-time data, it can get like $140 a month. So I mean, it can get pretty expensive just on the data alone. And secondly, it's only, at least the last time I used it, it's only usable on a PC. Meaning if you're a Mac person, you can't download and actually use Trade Navigator on a Mac. So that's a little bit annoying. Which brings me to, in my opinion, the best one, TradingView. Very good charting software. I use it all the time. A+ is across the board. Very similar to MotiveWave. A+ is across the board. I love the features in TradingView. It's a very easy thing to set up, right? There's nothing to download. It's browser-based. You simply pull it up and use it and create a platform. It's great. It's a very good software. And if you do sign up for the robust version, it's not very expensive. But let me show you my favorite feature in TradingView. This is my favorite one. It's linked with social components, so that's really nifty. So you'll see down here, the Twitter symbol, stock twit symbol. But if you ever publish an idea, all right, so you actually do your analysis and you publish it, what happens is a really nifty thing. It stores it. And I mean, this is just so much data, I can only even imagine. But it stores this data and you can actually go in and see what the trade did after you placed it. So here's an example of a day trade that we placed 2 days ago on a particular trade. Now this is the one that just really, really wrecked it. It was a great trade, very happy about it. And you can see the trade setup. I created all this, the artwork, this is all mine. But here's what's really cool about TradingView. You can click on the play button if someone publishes an idea and you can see how the trade played out. All right, so you can see this was a bearish trade. I want to make money as the stock went down, and we absolutely destroyed this thing. So really, really cool, nifty thing right there. It's just so much data, I can't even imagine. Here's another example, AMBA. So while I'm typing that in, let me show you, you can go to youtube.com, and if you want to follow us on TradingView, you can do so for free. How to follow real life trading on TradingView. You type that in and 2 videos will come up, in fact. First video, how to actually follow us. Second video, how to use TradingView. And then here's the second one, how to use TradingView part 2. So these are all free. Again, we have a lot of views on them because they're very good videos. This one has over 23,000 views. So how to use it. And if you're looking at how to actively participate in some of my charts that I publish and things like that, you can also just type in TradingView, tradingview.com /u/real life trading. I'll put this in the chat pane. Boop, there you go. You can also use it for future references. That's how you get to our profile so that you can follow us. So every time I post a trade, you will get one of these. And you'll probably get, seriously, like 5 emails a day, which they're just charting, ideas, but they might be helpful to you. Let's show one that we took about 10 months ago, and this is actually kind of one of my favorite ones. We have a lot. I'll show you 2 of my favorite charts I ever posted. Here's one on AMBA. And again, you can go through all of these and see in previous history what all of these stocks did. But this was really fun because this is what I love about TradingView. You can see the charts and check it all out. But notice the write-up in here. Really good support. Tried it once a while back for long-term buy and hold, buy low, sell high, accumulation trade, and it simply did not work. So that was me talking about, hey, I've already took this trade once and lost on it, and that was back here. Now, how much did I lose, ladies and gentlemen, if I lost on that trade? How much did I lose? Yes, exactly. 1R, right? So I'm going to lose on trades. It's going to happen. It is okay. Lose less money than you make, and you can make money, right? It's kind of the objective. It's kind of the key. So from here, while it's at this support, I was saying it didn't work. It's back down at a really good support. Risk reward is nice. Trying it again. And here was the analysis on AMBA. Here's kind of how it played out. Again, this is 10 months ago, almost a year. Beautiful bounce. We're talking about a 100% move right here. So if you had invested $10,000, you would have made 10 grand in 10 months. I mean, that 100% return, not trading some random biotech, medical marijuana pharmaceutical company, but like a legitimate company that's been around for a while that a lot of people are very familiar with. And again, that's just pure. Look at the screen, folks. All we used was support and resistance. We have 2 lines on this chart and candlesticks. That was it. That was all we used. No indicators, nothing else needed. Just keeping it simple, right? Buy low, sell high, mitigate your risk. Here's another one. Now, this one I'm honestly just showing a brag a little bit. AMBA 2 years ago was in a bubble, and I titled this one, "Don't Be That Guy." So the question was, who would buy here? And remember, back in class 1, I talked about my silver example and how I bought at the very, very top. And I remembered how that felt and how gut-wrenching that was, how much money I lost and how upset I was about that. Well, that experience has caused me to practice a lot, trading a lot of bubbles, trading a lot of movement that's just sporadic. It's moving too quickly. It's too intense, too fast, and just kind of seeing how it plays out. Looks like this one actually is taking its time. So there we go. So I was simply saying, who would buy here? I mean, look at this trend, folks. From 2013 to late 2015, it went up like 800%, something amazingly insane. And look at this angle, right? Is this buying high? No, right? We're talking just you can't get much higher than that. So AMBA, I sent this out to everybody. Do not buy here, and you can probably guess what ended up happening. But I mean, we're talking 2-3 days later, it started the just cataclysmically huge pullback. So posting this stuff on TradingView, I think is incredibly useful. If you do follow us, it's entirely free. So it's kind of like, why not, right? Why not give it a shot? You'll notice that we already have almost 250,000 views. By the time you watch this, on the recording land, it might be more. We already have 1,100 followers. It's entirely free. So look, I just got another one. One of you guys just signed up just now. So thanks for following us, guys. I appreciate it. But anyway, that's TradingView. It's a great platform. It's easy to use. If you have any questions on that, let me know. Now, brokers. Oh man, we could talk about brokers for a long, long time. We have a lot of videos on YouTube about a lot of these brokers. I've got TradeStation. It's either TradeStation or TradeKing. I have one of the two. Interactive brokers. We have Options Express. There's another one I'll show you in just a moment. But looking at these two, let's go through some of the brokers. This one, I'll kind of circle the ones in green that are the easiest to use. Options Express, Options House, very easy to use. TradeKing and TradeStation, pretty easy to use, and that's about it. Those are simple. So for my brand new, never before traded, if you don't even have a broker, those are probably the easiest to start with. One of those four. And it's just easy to, they're just easy to open up the account, to figure out how it works, to see how everything is moving, to use the features, things like that. It's a little bit easier. So Options Express, Options House, TradeKing, TradeStation. Again, I'm not getting paid to make any of these recommendations or referrals, even though you guys wouldn't care. Obviously, if I was getting paid but to do this, I'm not. So the brokers, in my opinion, those are good brokers. I'm going to circle the best brokers here in red. These are the absolute two best, in my opinion, for right now. When I say best, I mean most robust in terms of what you can do. Okay, that's really what I mean. So for very active traders, I'm talking about traders who are, legging into synthetic longs with an automated conditional order at a certain time of the day, and that triggers an order cancels other, which is a butterfly spread. Really advanced stuff. These two are the best ones. They can do anything. Thinkorswim Interactive Brokers, definitely created for more of your advanced traders. There's a new one out there called, what's it called? Tasty Trades. Tasty Trades is creating a new broker, and it was kind of initially through Thinkorswim in a way, TD Ameritrade, they kind of partnered together. Tasty Trades is another one. You have, they're very new. You have Dough, D-O-U-G-H. They're kind of through Thinkorswim a little bit. There's a lot of brokers out there, guys. This is just the tip of the iceberg. But again, for my more advanced active traders, Interactive Brokers, they do something really cool. They offer 1 to 4 margin for day trading. We'll talk about what margin is in just a little bit. Some other ones can do that too. TradeStation can do that too. Scottrade, E-Trade, Fidelity, ING, Merrill Lynch, they're at the bottom for a reason. They're great. There's no need to, what's the term? If you use them, there's no reason to just quit using them right now. If they're working for you, fantastic. They just are a little bit more suited for the beginning trader. That's all. The more bigger account, leave it alone, buy and hold. I'm not going to mess with it. I'm not going to do anything fancy. Now, they've made a lot of improvements recently, but they're my least favorite brokers. I've used Scottrade and E-Trade both before, and when I use them, they weren't that fantastic. Either way, it's totally up to you. Like, if you use them, there's nothing bad about them at all. It just kind of depends on how aggressive, how active you want to be as a trader. If you just want to be like a normal real life trader, you know what, I just want to make some money trading, I want to do the normal thing, no big deal, all of these will work. All these will work. Now, if you're a brand new trader, there's also a new broker that you can use called Robinhood. Robinhood's really, really cool. The reason I gave them A++ is because they have no commissions at all. 0 commissions. Very interesting, right? They do not trade options. You can only buy stock through Robinhood. Meaning you can buy shares of company XYZ and then you can sell companies. So the features, you can only use them on a tablet or iPhone or Android. You can't use them on a computer. So if I have any of my younger traders out there and you're a little bit more tech savvy, Robinhood might be great for you. They don't have a lot of advanced orders, so there's not much you can do. Again, it's just kind of buy and sell. But the free commissions thing is really cool. I agree. The free commissions thing, very, very dope. I love it. Ease of use. I mean, it's incredibly easy to use. Again, if you're really comfortable, well-versed with apps and things like that, you can use it. But Robinhood, great little platform, especially for younger traders or traders who are a little bit more tech-savvy. Maybe you have a very, very small account. Maybe you want to try some stuff out. Robinhood's good for buying stock only. There's a lot of other ones. Questrade. Have I heard of Questrade? Yes, I have. They kind of suck. I believe they're a Canadian broker, and they've been working on getting better over time. And they have gotten a little bit better over time. But yeah, Questrade, I've heard not amazing things about them. If you are an international trader, you can use Interactive Brokers. So Interactive Brokers, right here, in Interactive Brokers, they do have a international student, all over the world. I think you can use that. So Questrade, it's good, but you have other choices if you're Canadian. You can use Interactive Brokers, it's fine. Pro Real Time, nope, I've never heard of that, Pierre. If you want to email me that, I will be happy to look into it. Pro Real Time, never heard of that one. Again, guys, there's tons of brokers. SureTrader, yep, I've heard of SureTrader. They're kind of a proprietary firm. They offer 1 to 6 leverage. But if you use SureTrader, there are other alternatives. We can talk about that later. SureTrader, more of a day trading broker, for sure. For sure. SureTrader. Anyway, yeah, there's a lot of brokers out there, folks. The bottom line is they all probably work pretty well. It's not the broker that's going to make or break if you lose money or not. Of that, I can pretty much assure you. Okay? So again, just as a reiteration, it's not going to be the broker that makes you either lose or make money. It's going to be more or less up to you and how well you use what they provide. So here's the tools that many of the brokers do provide. Scanners, obviously we've talked about that a time or two. A lot of brokers use scanners. Educational videos. So, I mean, honestly, guys, this is a big resource. There is tons of free information out there. Now, it's not free if you use a broker because obviously you pay a broker commission, but nonetheless, right, it is a good tool to use. But yeah, educational videos, you pay commissions for a broker, no big deal. But the educational videos are solid. I mean, I really like Thinkorswim's educational videos. Option Express has good ones. Options House has good ones. They're not as good as mine, but I'm just kidding. Seriously, they're great, very well high-produced videos. They're solid. A lot of them offer charting softwares. So if you've pieced the puzzle together, what I suggest doing on most brokers is I use a charting software independent of the broker, and then I go place the trade in the broker, right? Because most charting softwares in a broker are only okay. For example, Thinkorswim is a charting software inside, realistically, TD Ameritrade. TD Ameritrade owns Thinkorswim. Thinkorswim is an incredible charting software. It's very robust. In fact, you might be able to see it on some of my screens over here. But this is another charting software right here. But Thinkorswim is really good. And bottom line, it's just you can't manipulate the screen the right way. You got to change a lot of things. Again, it's not super user friendly. So most of the time most traders, they have a charting software. They do the analysis there, and then they actually just simply input the trade into the broker. Another really cool thing about brokers is they offer virtual trading. Virtual trading is where you can paper trade, right? So you can actually trade fake money to see and determine how well your trade would have worked or could have worked or might have worked. And I definitely suggest practicing that application. Practice your virtual trading. Figure out exactly if you understand how to press the buttons right, how to place the orders correctly, so on and so forth, right? Use virtual trading. It's definitely beneficial. I highly suggest at least starting out to practice inputting a trade. If you're the first time you've ever done this, use your virtual trading. And of course, brokers use, they print out company reports, so the fundamental data and stuff on companies, they talk about that. They give you Morningstar ratings and all that kind of good stuff. But here's my favorite thing brokers offer. My favorite thing is margin. So I know you might be wondering, what is margin? What in the world is margin? Well, margin is using other people's money to trade with. Now, before you get crazy on me, before you wow out, think about this for a moment. Is there any other time in your life that you have used other people's money to buy something? Let's think about it for a second. Maybe credit cards, exactly, Linda. Mortgages. Yep, you're totally correct, Dina. Loans. Yep, you're totally right. So, using loans. It's not a scary thing if you go into it knowing your risk. Right? Using other people's money is not a bad thing. That's what margin is. So if you deposit $10,000 into a margin trading account, you actually will have 20 grand of stock buying power. Whoa, that's cool, right? I think it's kind of cool. So if you only have 10 grand, you actually have 20 grand to trade with. A lot of people, you might have heard the term margin is a double-edged sword, meaning it can cut you on both sides. And yes, I agree. There's definitely some risks with margin. You want to be careful and understand exactly how to use it. We're going to be talking about that in just a few seconds. The two types of accounts, and there's really only two to my knowledge. If you're trading equities at least. If you're trading stocks, you have cash and you have margin. Cash is your money, margin is other people's money. It's that simple. So here's some pros and cons of using margin, using cash. The pros of using cash, it's very easy to day trade in a cash account. The other pros are you're less exposed to risk, right? It's only your cash. The cons, you have no leverage. So you can only trade with the money that's there. So if you put in 10 grand, you only got 10 grand. So if you want to buy something and it costs more than 10 grand, you're out of luck. Some of the other cons, you waiting for trading funds to settle in a cash account. Now the pros of margin. Is that it gives you incredible leverage. Again, incredible leverage. It allows you to do many more strategies. I mean, we open up a whole other world. A whole new world. So cash, you can only buy. That's it. You buy stock, that's all you have. You buy, and that's it. You're done. Margin, oh my goodness. I mean, we're talking about, literally tens of thousands of additional strategies if we're talking margin. Credit spreads, put sales, condors, just buying stock on margin, selling different types of option strategies. Tons and tons and tons. Now the cons, it can be a little bit more complicated. And the other con is interest is charged when you use margin. And I would say another con would probably be more exposed risk, but we'll be talking about that in just a second. But the interest is charged when you use margin. Let's talk about the interest here for a bit. The interest, Dina, is laughable. Laughable interest. We're talking so little. It's almost unheard of. Bob, last year when you were doing your taxes and everything, man, did you even remember how much your tax bill showed on how much you paid in margin on interest? I paid way more in just commissions alone than I paid in interest on margin. Guys, the rates, I think, it depends on the broker, just like it depends if you go to a mortgage company. Each mortgage company might have their own rates, right? So it's the same way with a broker. But I'm talking something like 1.8% annually or something like that. 1 to 2% annually. So that means if you're in a trade for the whole year, you get that 2% interest on what margin you have used. I mean, it's like free money. It is not a lot of interest. So that should be the least of your concerns, is the interest that you use when you use margin. Just being upfront. Most people make that a big deal. I'm like, 2% a year? I mean, think about this. You could buy a stock that pays a dividend at 5% a year, and you could buy it on margin, and you get double the dividends than you would have gotten initially. You can make 2% more than the interest they charge you. It's kind of funny. So the biggest risk of margin, here it is, guys. Here's the biggest risk, is the exposed money, the exposed risk. If you do something dumb. Okay? If you do something dumb, margin can bite you. Type in a 1 if you've ever heard of the term margin call. Actually, I think that's the name of a movie with Kevin Spacey. If I'm not mistaken, it's actually a pretty good film. Totally wrong, but it's good. Margin call, that's what would happen. So Alex is saying, what's a margin call? Well, so realistically, here's what a margin call is. It's bad. Okay? We're talking like 1980 casino mob bad. In the sense that they can come and take your house, your car, your cash, and your bank. If you don't have the money to come up front with what you did, it's not a good day. So I do want to scare you a little bit intentionally, because it is important that you understand this. So let's talk about one of the worst traders in the world 8 years ago. His name was Jeremy Newsom. And let's say Jeremy Newsom had a $10,000 account. And Jeremy bought 200 shares of Apple at $99 per share using margin. So how much money did Jeremy Newsom spend? Almost $20,000, right? Almost $20,000. So he's maxed. He's maxed out. He's using all of his investment. So if Apple goes from $99 a share to $49 a share, what happens? How much is lost? How much is lost? $10,000. Now, whose money did I lose? Did I lose my money or did I lose someone else's? Yeah, I lost their money. Exactly. I lost their money. So what would happen in this situation if I lost more money than what was in my account? First of all, I lose all the money in my account. I lose everything. And if I lose more than everything that's in my account, you can get a margin call. So pretty much it's saying you lose all of your money and then some. What's going to happen is they're going to come after you saying, hey, we want our money back. If you use their money to take a trade and you lose all of it, they want it back. And they will do anything they can legally to get that money back from you. So you see $10,000 in this situation is the account that it used to be before the margin can be used. But the margin value is lost first. Right? Now, when you take a trade, we'll talk a little bit more about this, but when you take a trade, let's say you have a $10,000 account and you take a trade that's $6,000, you still have $4,000 left of your money. Okay, you still have $4K left of your money. In this situation, if you take the trade like this and you take another trade of $6,000, how much of margin will you use? You only use $2,000 of margin. Because 6 plus 6 is 12. So if you had a $10,000 account, you only have $2,000 of margin. Does that make sense? Okay, so you only have $2,000 of margin. If you lose that $2,000, right? You lose that $2,000, you're not back at 10, ladies and gentlemen. Okay? Because you used margin. So if you lose 10, where are you at? If you lose that $2,000, where are you at? You're at 8,000. Yeah. Okay. You're not back at 10, you're at 8. because they will liquidate your positions. They will pull out your cash because you lost their money. Does that make sense, guys? So how do we go about preventing this? I know it sounds scary, and I want to scare you a little bit, but how can we prevent this? Exactly. Yes, Brandon, you're totally correct. It's the R strategy that we're learning. The risk strategy. Exactly right. So we'll talk more about that in a few moments, but if you have $10,000 account, okay, what's 1% of $10,000 is $100. 1% of $10,000 is $100. What's 2% of 10 grand is $200. Okay, so if 2% of 10,000 is $200, what's 1% of 20,000? 1% of 20,000 is, you got it, $200. So it's the same risk. Now again, if you use 2% of $20,000, then that's really 4% of 10 grand. So you're risking too much money. So if you risk 2% of your margin account, you're risking 4% of your regular size account. That's just math. So that's why you should only use 2% of your amount of money that you have available, or 1% of the margin amount. It's the same number. Now, can you use a smaller amount? Sure. Right? If you want to use a smaller amount, meaning if you want to use 0.5%, okay, 0.5%, half of 1% would be $100 on a $20,000 account. So if you have $20,000, $10,000 of that being margin, then it's only $100. Dina said, do they check credit history for margin? No, actually, they don't. You just can sign up for a margin account and they'll give it to you. I know. Crazy, right? Now, they will ask, how much liquid net worth do you have? How much experience do you have? And based on those metrics, they'll determine what type of account to give you. There are different levels of margin, by the way. There are different levels of margin. This is just the first level, okay? You get 10 and now you have 20. That's just the first level of margin. There are some companies that can provide you up to 20 times your margin. Yeah. So that's just 1 to 2. There's such a thing as 1 to 20. Yeah, you got to be real careful in those situations. But anyway, this is just step 1. So here's some more info. I'm just going to read this. Just in case you want to learn more information about it. But a margin account is a loan from a brokerage firm. The loan proceeds are used to make an investment. If the value of the company XYZ shares drop past a certain point, say 25% of the original purchase value, this point is called the maintenance margin. The brokerage firm may make a margin call, meaning that within a few days you must deposit more cash or sell some of the shares to offset all or part of the difference between the actual stock price and the maintenance margin. Brokers have maintenance margin because they have lent you money and they want to mitigate the risk of you defaulting on the loan. Federal Reserve regulations and the broker internal policies determine the initial margin and maintenance minimum percentages. Bottom line is, I know it's scary. I get it. But it's a good thing. Don't be afraid of margin. There's no reason to never use margin because you're terrified of what it's going to do to your account, your house, your home. Just understand risk. I mean, if you go to a casino with your life savings and you put all of the money on black and it comes up red, you lose, well, you're an idiot. You should don't do that. I mean, that just goes without saying, is don't risk more money than you have. That's just a classic, just do not do this. I use margin all the time. Margin's amazing. OPM, other people's money. I'm all about that game. All right, I'm all about it. You want to use other people's money. It's not a terrible thing. Just mitigate your risk properly. Type in a 1 if that makes total sense to everybody. I just want to make sure you're comfortable. I wanted to scare you for a little bit and then say, you know what? Hey guys, it's actually okay. All right, so I'm getting a lot of 1s. Fantastic. It is okay, but it is something very real that you should know about. It is something very real you should know about. I use margin all the time, but with proper risk mitigated procedures. Okay? I've never had a margin call in my life. And even if you do have one, it's not the end of the world. For example, let's say you deposit $5,000 into your account, but you have $1 million in a bank account, okay? And you lose all five of this thousand plus an additional $1,000. Okay, then you can just pay back that 1,000. It's just pay it back. They'll call you and they'll say, hey, can you deposit a check into your account? And that's it. That's that. You're done. It's not like it goes on your credit score or affects bankruptcy or anything like that. It's not as terrible as I made it sound. I made it sound bad intentionally, but truly, if you have the money to cover your mistakes, if you get a margin call, it's not the end of the world. Just like if you get an audit, audits scare the crap out of people, but they're not that terribly afraid. Wrong term. They're not terribly frightening. An audit is just saying, hey, is everything okay? And if it is, then you have nothing to worry about, right? If you did everything normal, worst case scenario, they might go, you missed this, pay us an extra $400. And you go, okay, cool. And you pay. You don't go to jail just because you have an audit done. All right? So yes, margin calls, audits, they can be scary terms, but if you really realize what they are, at the end of the day, it's not a terrible thing. Just go in to both situations knowing how much you are comfortable risking. So I'm glad that we're all on the same page with that. But realistically, folks, the exciting part about all that is at the end of the day, that's about it. With brokers, that's all the information that I have presently. Because again, I could talk 14 hours about this type of information. If you have any questions about this specifically, about this program, please email me. Jeremy@reallifetraining.com is my email address. What I want you to do from here, if you have any questions right now, feel free to just throw them into the chat pane. But again, just go ahead and tell everyone you can about Real Life Tradings. Our mission is to enrich lives. So please help us achieve that mission. Just let people know that we're here to help. We don't have sales pitches. I'm happy to explain anything and everything I can about the trading world. I want to make sure you're all familiar, prepared, ready to go, comfortable. You understand your risks, how to approach the market. You can feel safe and secure in the market. You can feel like if you put your money in the market, you're not going to lose everything. And you at least have an idea how to approach it. That's really what I want to do because I truly believe that people can benefit from learning this information. So again, email me. Let anyone at any time know. Let me know what I can do to help better serve you. So the great news about here, again, feel free to review the material that we've talked about previously. The great news is if you're watching this in the recording, you can just simply hop over to class 4 and start checking it out, start rocking and rolling and build your plan. Again, still no sales pitch in that particular class, but what I want to make sure you're comfortable with is that you've got your charting software, you've got your broker, you're starting to actually take this action. And if you need help taking this action, email me. Let me know what I can do to help. If you need a coach, if you need someone to help, hold your hand, walk you through each and every single process, I can do that. Just let me know how I can assist and we can make some magic happen together. Okay? Ladies and gentlemen, thanks so much for tuning into this webinar. For those who are here live, thank you so much for the kind comments. You guys absolutely rock too. Ron, have a great night. Sam, have a great night, man. Bob, you're absolutely fantastic. Justin, thanks for being here. Ladies and gentlemen, you're incredible people. You absolutely rock. Have a great rest of your day, night, week, year, month, wherever you are in the world. You're awesome. Until next time, love life, live life, and trade it. I'll see you later. Bye.